Hope you're having a good morning. Well, as promised, let's get in some fundamental insights into all those stocks that we tracked in our top 10 segments. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Hope you're having a good Friday morning. Tell us about your view on Lupin. The numbers look pretty okay. Not a blowout quarter, but they looked more positive than negative. Your view on the stock?
Yeah, good morning, Nigel. Thanks for having me on the show. Yeah, a lovely Friday. So if you look at Lupin, I think numbers clearly were ahead of expectations, not only for us, but for the entire street. And you have seen that the consistent outperformance has led to the stock also moving up sharply. So for this quarter also, we saw good numbers. US sales grew about 5.6%. Domestic formulation, which has been the key growth factor, was about almost 19%, and gross margins expanded 360 basis points, which led to an EBITDA margin improvement. So you had some provisions plus forex gains and government grants. So if you adjust for all that, adjusted PAT was up 56% at almost 770 crores, much ahead of our expectation of 690 crores. So I think with consistent delivery in terms of earnings growth across segments, plus the sharp margin improvement, I would continue to keep a positive view on Lupin. Valuation-wise, yeah, it could be a little bit higher compared to some of the other pharma names. But nonetheless, I would say that with the kind of growth it is able to consistently deliver, the stock could continue to outperform.
Siddharth, hi, morning. Are you telling your clients to buy trend after yesterday's fall or not yet?
So yeah, Rima, a very interesting question. We had a long debate in the morning meeting as well about what to do with trend. So if you look at, while the numbers are definitely lower than expectations, but nonetheless, the growth in itself, and given the current environment where some of the consumer-facing names are unable to deliver the growth or are facing challenges, we felt that this growth is still very strong given the current environment. And this is a name that has been a fancy for a lot of investors who like this kind of brand, like this kind of B2C segment where they are consistently delivering growth. So yes, I think while the numbers are lower and some of these stocks where valuations are difficult to predict, it's just like, as I said, a fancy for the market. So any correction of about another 5 to 10%, I think that will be a good opportunity for people looking to get into a strong consumer brand which can consistently deliver growth. So our expectation is a 30% earnings growth for the next 2-3 years, which it can consistently deliver. And again, as I said, valuations best to leave it with the market. But with that kind of growth and the correction, I think there were excesses that were built into the valuations, which with the fall in the last few days as well as yesterday, and another 5-10% correction, we will definitely start recommending to buy on Trent again.
Siddharth, I mean, the outlook, morning, metals were the top losing sector yesterday. Of course, there was Hindalco specifically weighing on the index as well, but there were others also which were lower. Of course, dollar was also up, dollar is down a little bit. But the outlook is still not very clear, right? Because it's a global sector in that sense, and there's a lot happening in the globe. Anything you like fundamentally in that area? Actually extend that to oil as well, commodities, metals and oil.
Sure, Prashant. So I think, yes, it's a global sector and a lot of things are happening globally. First, you have the China parliament meeting on the stimulus package for the economy. Then you had a Trump winning the elections in US, which is again a counter action for the Chinese economy. So you have mixed cues globally. Domestically, I think demand continues to remain a bit strong, and we have the upcoming budget in 1st of Feb. So you'll start hearing a lot of noise with the government spending on infra, which to our understanding has been pretty weak in the H1 of the current financial year, given the elections and then the government formation and all those kind of things. So I think, yes, it's a mixed trend. But if you look at some of the results, what we like Jindal Steel and Power, which has been our preferred pick in the ferrous space. In the non-ferrous space, Hindalco has been our preferred pick, where value addition and the Novelis business is providing that value addition and the consistent growth. Coming to oil and gas, I think, again, a lot of global factors impacting the leader of the pack, Reliance, unable to deliver consistent growth, and then hence the underperformance. What we like from the upstream oil companies, we like both ONGC, Oil India. We believe they are in a structural uptrend for the next few years. They would continue to do well. From the downstream, if you look at, we like some of the oil marketing companies. So IOC, HPCL is something that we like from the oil marketing companies.
Siddharth, MGNL, which is a city gas distribution company, they have signed a pact with America's International Battery Company, and they're forming a joint venture which will foray into battery cell manufacturing. So they're planning to set up a gigafactory in Bengaluru, and they're talking about an aggregate investment of close to about 230 crore rupees. So it's a way to strengthen their presence in the energy space. What have you made of this announcement getting into battery manufacturing for a company like MGL?
Yeah, Rima. So I think in this current environment, a lot of companies are wanting to get into the future technology in terms of energy, be it renewables, be it EVs. I think that's a step in the right direction, given that your energy demand from the gas, we have seen how the financial performance has been below expectations, mainly on back of lower volumes, margins pressure. So I think we have seen a lot of derating in the gas companies in the last few quarters. And I think this could be a good step in the right direction to be future ready in terms of energy requirement solutions.
What about M&M? You know, the numbers were fine. There is a pickup in the tractor demand, particularly as rural economy is recovering. But the stock yesterday post the numbers fell. Market was also weak. But where do you stand on M&M after the kind of rally we've seen? Yeah.
Yeah, so I think the performance was in line with our expectations. What was interesting is that the tractors business has done well, and they have raised the guidance in the second half. So you are expecting double-digit growth in second half, which is a key segment for them. So overall, we remain positive on M&M. We believe the numbers have been in line, and the farm equipment segment margins, the PBIT margin stood impressive at 18.7%, which is an increase of 120 basis points on a Y-on-Y basis, despite it being a seasonally weak quarter. So if you look at across segments in the SUV segments, that continues to do well. The core segment of tractors that has started doing well. So I think this company will do well. We have a buy rating and a target price of 3,420, which is almost 18% upside from current levels.
Okay, well, Siddhartha, thank you very much for your time. Great to have you with us here. Appreciate it. You know, the